Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar continues to trade around familiar levels just underneath the 72-cent handle. With Friday's price action closing relatively flat, is that we still remain above the level of 71.4060 area. Now at the weekend, virtual talks between the US and China officials were meant to review China's complaisance with the so-called Phase 1 trade deal, but that was cancelled quite abruptly. Meanwhile, in Washington, lawmakers seem to be unable to move forward with the coronavirus stimulus bill. Furthermore, White House economic advisor Larry Kudlow also told news sources that the administration and Democrats were still on a stalemate, as in no movement between the two sides. Looking at the technical aspect though, is although the MACD is negative, the RSI has broken back above the midway point. So therefore, no doubt we will see another upside test. But towards the level of 72.0525, I do anticipate the supply to return. The reason behind this view is that we're looking at the broad picture is the trend has been broken, but no confirmation as of yet. We do need to see a close underneath the level of 71.40, New York that is, close. That will give us a further indication to the downside. But as you can see, after at least 6 attempts, the market does not want to go underneath this level and still relatively defending this region. With the dollar slightly on its back foot again, is that we can see the euro has pushed further to the upside. Now we are getting very close towards this supply zone, which is somewhere around 118.80 to 119.50. I do anticipate that the further supply should return if we see a recovery in the dollar, which I do anticipate. Now looking ahead, we do have the Federal Reserve minutes this Wednesday, and no doubt the market will be keeping a very close watch to what they will reveal. Overall, though, as I mentioned, the supply zone is seen around this level, around 118.80 to 119.50. And as we've seen a few attempts fail, I anticipate this to happen again. Eventually see a move back towards the downside, with the level seen at 116.95, which is a key trigger level. And if we get a break of that, then we can look at further levels to the downside. The call to the upside since the bullish outside range day was at 107. Well, we got there, and we got a hanging man and a rejection from that and a break of this short-term trend. Therefore, it does give further indication that we could be looking down towards a region of, I believe, of around 106.25 to 105.85. Now, if we see a break of 105.85, then this will give further evidence down towards the lower side of the range around 105. As we are looking for many trigger levels, there's one for the pound. With this tri-star doji, which is a gravestone and two hanging men, and the fact is that we've had many attempts, at least 3 or 4, at the level of around 130.30. I do anticipate if we get a close of New York underneath this level, should open away and expose the region of 128 to 127. The MACD is supportive of this, but the RSI is still keeping up with the bullish defense, and therefore we might see a little bit more challenge towards this level, a challenge, and probably see a lot of defense until we get a close, and we are still maintaining above this range. Now, dollar CAD has broken slightly to the upside, and the reason behind that is the rebound from 132. I would like to see the technicals a little bit more in support of the rebound. As of yet, it's not fully confirmed, but keep an eye on it, because if we do see a further rise, then we could be looking at 133.15.30 and reassess from there. It would seem that the bulls for the gold are a little bit on the apprehensive side. And the reason behind that is we didn't get a break of 68.72 to support the next level up towards 2000. Instead, the market has somewhat shown a slight hesitation towards that topside range. Therefore, although my view is neutral, I am monitoring this pattern, and if we do continue to remain in this shape of weakness, then I do anticipate a pullback towards the bottom side of the range, which can be anywhere from 1,910 or maybe lower, where the base comes in around 1,860 to 65. And wrapping up with oil, well, the market is still showing a slight threat to the upside. The reason behind that is the RSI is maintaining above this midway point at 50. Along with that is that the MACD is also somewhat showing a potential bullish phase. in terms of a break over the zero axis will give us further indication that the market is looking on towards 43, 44 to $46 a barrel. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. Enjoy the great start to this new day and to this new week.